Hi everyone, I'm Matt from Looking to Bitcoin, and today we're going to be looking at why you shouldn't follow the crowd. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. And if you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now, I'm just on the active address sentiment indicator, but ultimately for this video, I could have picked almost any chart we have on lookintobitcoin.com, because today we're going to be covering why you should really act as a contrarian as much as possible when it comes to your Bitcoin investing, because a vast majority of the time, a vast majority of people are just wrong. They are poor at timing the market. They often lose on their positions. They tend to buy the tops and sell at the bottoms, and ultimately acting as a contrarian and acting in an opposing manner to these is ultimately the best thing you can do for your investing. However, it's much harder said than done. I'll be the first to admit, obviously it's hard to be a contrarian when Bitcoin's price is at all-time highs, everyone's happy, everyone's greedy. At times like that, it is hard to be a contrarian, understand your own emotions and biases. And the same at the bottom, it's difficult to see that things will get better when things seem like they've never been worse. But something like the active address sentiment indicator really does give a good short-term example of how you can really act as a contrarian. This is looking at the 28-day percentage active address change for the BTC network and the 28-day price change. And we can typically see a lot of people tend to rush into Bitcoin when we see a price increase. They're trying to maximize their profits, they're trying to get in, but really they tend to get in at the wrong time, and especially they tend to get in after we've already seen the prominent Bitcoin upside move. So what we can see here is once this orange line crosses above this upper red deviation band, this typically aligns with Bitcoin's price topping out, and especially once this decreases back beneath this red deviation band, it has often preceded a more drawn out decrease in the Bitcoin price. Now, this has been true for as long as this chart history goes back. Once we see this line increase above, usually indicates that we've already seen the prominent move, and then we usually see a bit of a retracement following that as well. And once we see this beneath this lower green deviation band, indicates that there's almost no active addresses, there's no one coming into the market. 28-day price changes decrease, so generally that leads to a lot of people being a bit more fearful with their positions, and this tends to be the best time to accumulate, or at least take a short-term punt using this metric. But we can, as I said, use so many different metrics we have here. The realized cap hodl waves, which is looking at the influence on the realized cap or the average accumulation price for all Bitcoin on the network, but grouping them by different age bands. And we can see if we just look at the shorter term age bands, such as the 1 month and under, we can see that these tend to come in and purchase at substantially higher prices than what would maybe considered the fair value. A lot of people consider the realized cap, as it's the average accumulation price, to be the fair value of Bitcoin, and we tend to see a little bit of mean reversion as we go exponentially above that before coming back beneath it a little bit, which usually indicates a great time for accumulation. But we can see this indicates that people that have only been in the Bitcoin space for 1 month or under tend to come in and purchase Bitcoin just as the prices are peaking at the top tail end of a bull cycle. And again, this couldn't be the worst time to buy Bitcoin. You want to buy here, but this is when no one is buying Bitcoin. The new traders coming in, the retail traders, are refusing to be involved. They're refusing to accumulate. They don't want to be involved or have anything to do with cryptocurrencies. But in every single cycle, it's the same story. As soon as we see this really start to bottom out, almost no interest in the market, no one really wanting to buy. Again, that is the best time to do so. You need to act as a contrarian and try and do what you'd think most people aren't willing to do. If we look at the Bitcoin funding rates, this is coin-denominated Bitcoin funding rates. So this is looking at derivative contracts, specifically perpetual futures contracts. We can see when this is incredibly low, it indicates the majority of people are shorting the market. And once this is positive, especially when we get these huge positive spikes, indicates that a vast majority of people are long the market. They believe price is going to increase. And again, we see this inverse correlation. We can see time after time, once people jump on to try and short, to try and bet on price decreasing, this usually ends up aligning with the bottom, or at least the local low, in a more shorter term market move. And again, once everyone starts betting on the price to continue increasing, again, this generally tends to line up with a vast majority of the people being wrong. And really, as I said, there's so many different charts I could have used for this, but ultimately you can just use something like the fear and greed index, because ultimately markets move on emotion. New retail traders and investors and more inexperienced market participants act on emotions more than anyone else. And we can see there's just such an obvious inverse correlation once we see fear and greed index scores this low, such as here after the COVID dump when we saw scores of 9, 10, 8, 11. And then again in 2018, we saw scores 10, 11, 13. Most recent cycle scores of 6. Very low scores here indicate that a vast majority of the market's very fearful, which really indicates that people aren't willing to accumulate Bitcoin. They think price is likely going to continue decreasing. But this is where the famous saying originates. You need to be greedy when others are fearful, be fearful when others are greedy. You need to buy when there's blood in the streets. Every single time we see exceptionally low scores for a drawn out period during the tail end of bear markets, this has often been a great time to accumulate BTC. And again, once we see very greedy scores of 95, lots of retail flooding back in, lots of people buying the top, potentially lots of capital going to more speculative, lower market cap altcoins, this usually indicates and aligns with a market cycle peak. Ultimately, you just need to take into account from this video that playing as a contrarian in the market has performed exceptionally well compared to just following the herd, doing what you see typically most people on social media platforms when you're talking to friends who are investing and trading. Typically, they're reacting on emotion. They're not looking with a data-driven, unbiased and unemotional point of view. And it's very hard to do so, but it's something that I think is very crucial and probably the number one skill in determining your long-term success within the cryptocurrency markets. So just to summarize, historically, a majority of crypto market participants have performed poorly. This is due to the irrational yet instinctive, fearful and greedy emotions that impact traders and investors. Like I said, it's much easier said than done. Once we get to the next all-time high, it's going to be very difficult to tell yourself that now is the time to consider locking in profits, scaling out of your positions. And the next time we're at a cycle low at the tail end of a bear market, it is difficult to tell yourselves that things will get better and now is the time to accumulate. But ultimately, this is one of those skills you have to master and what really separates the average investor from the great investor. And these market emotions are usually very cyclical and often easy to spot. Like we said, within yourself, it may be difficult to understand that you're being a little bit biased, emotional and opinionated, but we have so many different data points that can very clearly and simply define these periods. So you can try and get away from this herd mentality and try and act more as a contrarian. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to get access to live chats, in-depth newsletters, indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And if you prefer more shorter term metrics to potentially have short-term plays, trades, for example, we do have some great new charts going live soon on Look Into Bitcoin, so definitely stay tuned for those. And let me know in the comments down below, do you prefer to act as a contrarian in the market, or do you think that maybe looking at the retail emotions is potentially the best way to go? As I said, let me know. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.